In this presentation, we will enter a bank reconciliation for the first month of operations within QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the home page. We currently have the open windows open. The way to open the open windows is to go to the view drop down and go to the open windows list. We're going to do a bank reconciliation for the first month of operations. What we've done so far is we've started the business, we've entered a month of operations, and now we're going to reconcile the bank account. So we're working in the first month of January, and so note that what happens first when we do the bank reconciliation is, of course, we get the bank statement. Now, don't get the bank reconciliation confused with things like bank feeds and things like that. There's other types of ways that we can get information from the bank these days, of course. We can go online at any time and get the banking information and see or track what is happening. We can even download that banking information and upload it into our system sometimes automatically. However, that's not the same thing as a bank reconciliation. So even if we're able to do those things, it's not reconciling our account to the bank account. What we want to do is reconcile our account to the bank account, and ideally we would like to put our own data into the QuickBooks file and then reconcile to the bank account. And the idea of that is that there's two checks, meaning our reconciliation is not there to double check that the bank is correct. It's typically to double check that we are correct. And if we have the outside source to do that, then we can kind of check each other off. So we can check whether both of those things are correct by doing so. So it's one of the most important things to do a bank reconciliation. And the first thing we're going to do is get the bank statements typically monthly. So we're usually going to get the monthly bank statement. Even if we check our bank account every day on an automatic check, we still want to get the bank statement monthly so that we can reconcile on a periodic basis. We have to know the beginning and ending dates in order to reconcile, properly. So what we're going to have here is we're just going to have the bank reconciliation will look something like this. Obviously, this is just a made-up bank reconciliation, but a bank reconciliation would have the beginning balance here. So as of January 1st, we're going to have additions, we're going to have subtractions, and then the ending balance at the end of the time period. So January 1st to January 31st. And then it's going to have the activities. The activity, the deposits or the additions will be the deposits. So here's our deposits here, and they add up to that 136, 128, 136, 128. And here's everything that went out, checks and other, is 51, 713. So if we have bank transfers or other things, of course, this could be checks and anything else that goes out. And that's fine. And some of the stuff, depending on how we're doing our bank statement, we may have all of this stuff in our system. The more we have in our system, probably the better, because again, it's a check. The bank would be a check against that. So if we're writing checks out of the system, then of course all those checks that we wrote should be in the system. If we're, paying deposits out of the system or entering deposits into the system, of course, then we should be entering those into QuickBooks as we enter them into the system and not wait to see what happens on the bank side, because it could go wrong. I mean, there could be a problem on the bank side that they missed a deposit or something like that, and we want to make sure that we can account for that by having two sides. That's the point. So on the other hand, it might be the case that we do some electronic transfers and we get things deposited into our account automatically, and we don't record that in QuickBooks, or we do electronic transfers, a lot of electronic transfers on the checks, and we don't have those in QuickBooks till the end. So it's quite possible that possibly we do all of our business basically outside of QuickBooks and then just get this bank statement and enter the data into QuickBooks so that we can track what we need in terms of our business data for at least tax returns, at least, and also for our own data purposes. So it could be that in our case, we're going to have most of the stuff's already in the system, and what we need to determine is how much of this stuff that's on the bank statement is in the system and how much is not. And usually the rule will be this: if it's on the bank statement here, but not in our QuickBooks system, then we're typically going to have to add it, unless the bank is wrong, which is not usually the case. So if it's on this statement from the bank, but it's not in our books, we're probably going to have to make an adjustment on our books. If, on the other hand, it's in our books, but it's not on this bank statement, it's not necessarily an error. I mean, we're probably not going to have to go to the bank and say, hey, your bank statement's wrong. And we're probably not going to have to go to our books possibly and change the books. The books may not be wrong. There may not be any error. The problem is probably going to be a timing difference, meaning when we wrote the check, we know when we wrote the check in January, for example, in this case, and it may not clear till February. That's a timing difference. So no one's really wrong here. The bank is kind of wrong because they don't have all the information. They don't know about the check we wrote. We know about the check. We wrote it. That's why it's out of our system. It hasn't cleared the bank yet. It will do so in February. So what we're going to do is find those timing differences, and that's going to be the bank reconciliation. That's what will construct the bank reconciliation. So all we do with a bank reconciliation is we get the bank, we tick and tie each and every transaction out to what we have. It should be the same because we're entering it in our system and they're entering it in theirs. Anything that's on the bank, we will then add to our system. Anything that's in our system that's not on the banks is probably an outstanding item, outstanding check or deposit, a timing difference, something that has not cleared but will clear in February, and that will be the reconciliation item. So all we have to do is check this off and make sure that we can find a home for all these items in our books, and we should be good. Then QuickBooks will be able to make a bank reconciliation, and the bank reconciliation will consist mainly of those outstanding items, uncleared checks, uncleared deposits. Now, note that the first bank statement is often, bank reconciliation is often the most confusing because of this beginning balance. So a lot of times when we first start, we have the bank in place before we start the operations. So therefore, we may not have entered this beginning balance on our books. We did in our system because we put it into opening balance. But if you didn't put beginning balance into your books, and you just started doing transactions and said, oh, now I'm going to try to reconcile, but I can't because I checked off all these and they add up to 136, 128, but I don't see where this 25,000 is because it's the beginning balance and it's not in my books. So what we have to do is, of course, add that. We'd have to add the beginning balance, and if it's not in there, it would be something like a debit to cash and a credit to an equity account, like retained earnings or capital. And then it wouldn't show up at the beginning balance, but it's going to show up in the activity. And so we'll show you that as we go through that first bank reconciliation. So the first one is usually kind of the most tricky one because this beginning balance may not line up. And if it doesn't, that's a problem. However, we can fix that. It may not be the prettiest thing on the first bank reconciliation. That's okay because what we're going to do is draw a line at the first bank rec, and then everything from there going forward should be all good. So we're going to go back to the QuickBooks now and see where to do that. To do that, we're going to go to the banking drop-down. So we'll go to the banking drop-down, and we're going to go to bank reconciliation, just reconcile. Okay, so here we have the checking account. That's the one we want. If we have more than one cash account, then we'll choose the correct one. And we're going to have the date. For us, it's going to be 01/31/19. The end of January is what we're doing. Now here's that beginning balance, and that beginning balance then should match what is on our bank statement. If it doesn't, there's a problem. And we're going to have to account for that in one way or the other. Either we enter the beginning balance, and if you haven't done so yet, I wouldn't go back and really enter an opening balance because you're entering it, that could get kind of messy. I would enter it in a journal entry, and then go back and check it off, and I'll show you what I mean when we do that. So I'm going to close this out. So if this beginning balance doesn't match, then you're not going to be able to reconcile without accounting for that amount somehow. Then we're going to put in our ending balance here, and our ending balance is going to be this 109,415 back on our bank statement. Back to QuickBooks. There it's going to be 109, what did I say? 109,415. 109,415. Now then you have these two amounts down here are service charges and interest expenses, interest earned. And QuickBooks is trying to say, hey, we'll just do a quick transaction for you here. If you had service charges, you can just enter it here and click this drop down, and we'll do the journal entry for you to add the service charges, because the service charges, as I'll show you here, back to the bank statement, We can see service charges here. If we had those service charges, they're not going to be on our QuickBooks system because we didn't know of them. The bank just took them out of our system. So that's one thing for sure that is going to be on the bank statement, that if it's on the bank statement, we don't have it in our books because I didn't know about it. So QuickBooks, I'm going to go back to QuickBooks. It's trying to say, hey, if you have service charges, we'll put them here and we can just take care of those. And the same for interest earned. If I had interest earned, we can put that here and QuickBooks will do the transaction. Just make sure to get the date right. I'm not going to do them here though, because it can be a little confusing because you don't get to actually check them off. And I would rather actually enter the data because there's going to be usually there's more than just those two things that we're going to have to add anyways. So I would just rather add them into the check register directly along with any other transactions that I need to add to make everything reconcile. And that way I can check it off and I can check everything off on both sides. So I'm going to say continue and show you what I mean there. We'll say save and continue. And so here's the bank reconciliation. This is going to be like the worksheet. This isn't an actual reconciliation, but this is a worksheet that's going to help us to reconcile. And all we're going to do is check all these things off if we find them on, going back to the bank statement. So as we find all these items on the bank statement, we'll just check them off. And so note a couple things then. If we had used that little item to enter the service charges, QuickBooks just does that reconciliation outside of checking it off. It doesn't make us then check it off here. And that can be confusing because our goal is to check everything off here to the bank statement. And if this item isn't something I can find here, then I could be a little confused by that. Not if there's just one item and I'm only off by $15, it would be obvious. But if I was off by some combination of something and it included that $15 and I didn't check it off and have to be able to see it actually being checked off, then that can kind of throw me off. So I would rather put it in manually and check it off just like every other transaction that we're going to have. So I'm going to go back to the bank statement. Now, the other thing that I wanted to mention is that beginning balance, the $25,000. If this $25,000 wasn't there and you went in and just entered it as a transaction later instead of going back to the beginning balance, which I think is a good, it's a reasonable thing to do. Otherwise, if you go into the beginning balance, it might post it to like the opening balance equity, which is kind of wrong, and you'd have to adjust that. So the journal entry then would be, debit to the checking account and a credit to some kind of equity capital account, not the income statement, not revenue. And if you do that, then it'll probably show up here, and that's the kind of workaround. So what you're going to do is say, okay, the beginning balance is wrong on my first bank reconciliation. I'm okay with that because all I'm going to do is check it off as one of the deposits as if it cleared during this first month of operations. I know that it didn't, so I can note that on my bank reconciliation. But in order to make the first bank reconciliation work, we're going to do what we need to do to make it work. And that beginning balance could be part of that to make it work. Once we have that done, every bank reconciliation from this point forward should go smooth. And it really does go smooth. The bank reconciliation shouldn't be too difficult of a process. It should be kind of assuring. The bank reconciliation should make you feel good that you say, okay, I've checked everything off, I've cleared everything to the bank, and that's pretty good assurance. If you got the bank reconciliation done and you've entered everything into QuickBooks, then you could feel pretty confident, more confident than most, that your numbers are reflective, or at least all the data is in place. So it should be a good process. So all we have to do now is just tick and tie this stuff off. So we'll just go one by one here. We'll start with the checks. Now the checks have a little bit more data that we can use to check everything off. We've got the date, we've got the check number, we've got the amount. Now, the check number is something we can definitely use to help us. The amount, of course, is something we can use. As long as we check off the same amounts on the bank statement as in our books, then we'll be able to reconcile. But hopefully the check numbers line up. If they don't, that's an indication that something funny happened. The dates, however, aren't as useful because note that these are the dates that they cleared the bank, not the dates we wrote the check. So these dates will always be after when we think about checks. And for checks, they could be a good time after depending on who we wrote the check for. I mean, if we wrote the check to an employee, gave the check to the employee, and the employee likes, wants to go out for the weekend on that money that we just gave, then the check's probably going to be cashed pretty soon. However, if you're giving the check to like a government, like the IRS or something, you're mailing it to them, and then they're got to deposit it, and they're a big bureaucracy and whatnot. They may not deposit it for quite some time, and they might not have it, and so this could be out. This could be a lot later than our number. So our number is really correct because we know the check's out there, and we know it's going to be taken out of our account. But this date could be a lot later, and that's the timing difference. That's the problem that will be caused. So all we can really use are these two items to match out. So we've got check 101, 12,000. So if we go back to here, 1001, 12,000. So what we're going to do is just go through this whole thing and start checking these items off. And if we find all of them, once we find all of them, this difference down here will go to 0. And that's all we really need to know. This difference will go to 0, and we'll be okay if we can find everything. Now there's a couple other things you may want to mention here. Hide transactions after the statement date could be useful. For example, if I notice we entered transactions for January and February, and we had not reconciled for January yet. So all these ones in February, you would think, are not applicable. So if I would just like to remove these, and I can just click this item. And now we only have items in January. And that should work because it shouldn't be the case that we wrote it in February and it cleared in January. That doesn't happen. What will happen, could happen, is if we wrote something in January and it didn't clear the bank till February. That's possible. So our books are always going to be earlier because we have foreknowledge of the transaction. The bank will always be a little bit later because it's not going to clear the bank until a little bit later. So you can see that checking that off can clean some stuff up, especially if we're doing this for an entire year's worth of bank reconciliations, which is possible. Highlight the marked area. So this, if you want that highlight on there or not, this would be selecting all. So if we were confident, we said all of this stuff's on the bank statement, we can just go boom and select everything, and that would be good. Or maybe we want to select everything and try to uncheck things that are not on the bank reconciliation. That doesn't work very well. Yeah, I mean, you're probably better off just going through and checking it off. But and they often do this in example problems as if that works. So it doesn't usually work in practice. You're going to have to go through and check it all off, and there's not really a great automated fix to that the most point. We can download the information, but we still have to kind of figure out how much of those have cleared in January. So if you go through the whole thing, which does happen often, and you're saying, I'm still out of balance as I am here, then you have this unmark all, and that is a very useful one because that does happen quite often that we have to unmark. Column displays, you can adjust the column displays, and again, this will give you some information in terms of the reconciliation process. So deposit and other credits, checks and payments, and this will give you service charges, interest. These would be given if you had entered in those fields. So that would help you to kind of reconcile or know what happened. But again, I would rather just check it off up top. Ending balance and then the cleared balance. And then this is the difference. So these two things are basically going to have to match. This difference, in other words, has to go away. And so once this goes to 0, then we'll be good. And that will happen as long as we can find a home for everything on this bank statement somewhere here. If we can't find a home, we'll add it. We'll make a home. And then we'll make it work. Okay, so this first one's checked off. So I go check off here. And then usually I would just highlight this or something like that. Highlight and make it green. So we found that. And if this was a paper document, we can highlight it. If you got a document, you download a PDF from your bank, then you can sometimes use highlighting features in there and just all do it. If you have 2 screens, it's very nice to do on 2 screens. And you can just check off one side and enter the other side, so it shouldn't take too much time. Now we're looking for check 1002 for 16,000. Going back to our QuickBooks, we see 1002, 16,000. It's not always going to be in the perfect order here, by the way, and your bank could check in different orders. It might be in order by date or by check number. So it's nice if they're in the same order on your bank statement as it is in your books here. And you can change the order by selecting these items. So if you want it in order by check number, you can change this item here and by date, you can select these items. It's in order by date by default. Also note that the dates here are always going to be a bit different, so we can't go by those dates once again. So we're going to go back over here and we're going to say, okay, we found that one. Now we're looking for 7,000 on for check number 1003. So 7,000, 1003. We will then find that. So here's the 1003, 7,000. Checking that off, highlighting this, found that. 1004, 400. So we're going to say 1004, 400, found that. And then we're going to go, okay, that's done. Check 1005, 598. 1005, 598. And next one we've got, let's highlight that. We're going to say 1008, 620. And so we skipped a couple, 1008. So notice these two don't look to be on our bank statement, even though they were written before this one. And that's because, again, when we wrote it possibly before, and this one's on the same day, but it could be possible that we wrote it in a prior day or whatnot, and it still didn't clear because it depends who we gave it to. It's possible that the insurance company doesn't deposit their checks as fast as Edison does. So that's quite possible. So then we're going to go, okay, so we found that one, then 1010 and 15,000. So 1010, 15,000. So we're checking all those off. And notice what I'm doing here. I'm going from the bank to here. I'm not going from here to the bank because I don't expect to find all these here on the bank. These ones we didn't find on the bank, and that's to be expected because they were written at the end of the month here. So it would be expected that possibly they haven't cleared yet, and they'll probably be cleared next month, and that's okay. So we're just going to say, okay, those are probably outstanding. So when you go through these, you'll get mixed up saying, I'm going to go from here to the bank, or should I go from the bank to here? Like, go look at the bank and then find those items here. And then you'll be left with some that you cannot find here. And those are going to be the outstanding items that we have. So we're not worried about these items. And if we are worried about them, it's sometime after January at this point. So we can call the bank or pull up our bank summary and say, did these clear in February? Which they should have. And if they have, then these are just timing differences. It's okay not to have them checked off because we're going to reconcile, showing that the difference between our books and the bank books is in part due to these outstanding checks. And therefore, our books are correct. Our books are correct because we know we wrote these checks. The bank just doesn't know about them yet. So as long as we know exactly what that difference is, we can say that everything else is in there completely correctly because it's been checked on our side and verified on the bank statement. Okay, so that's what we have so far. If we go back over here, we're going to say we found that one. Now, what we're not going to find is the 80 and the 15 because that's a withdrawal and that's bank charges. So we're going to say, okay, I couldn't find those here. So maybe we withdrew money from the bank and we just took cash out and we don't know exactly what we did with it. We should have, put something in. Maybe we just put it in the petty cash and we don't know what happened to it. And then the other is the $15 bank charge. That's not going to be on here because we didn't know about it. It's not, so we couldn't have put it into our system because I didn't know until I got this bank statement that they charged $15. So those are the two that's pretty much always going to be on the bank statement. Also, we're going to have any kind of electronic transfer or anything like that. It's probably something that we're not going to have on our books. It's going to be on the bank statement. And some companies might do almost all of their business that way with electronic transfers and charges, and therefore might not be entering their information into their system except by the bank statement, which isn't the best way to do it, again, because you'd rather have a double check. But if that is the system we're working, then we're just going to take all this information and we're going to enter it into our QuickBooks system at the point in time that we get the data from the bank. Okay, so then we have the other side, which is the deposits. And we don't have the check number here to help us as much. We only have the deposit amount. There's the 50 there. There's the 50 there. Now note that these are going to check off really well if we batched everything and worked everything through the undeposited funds correctly so that we batched everything in the same format as will be seen on the bank statement. If we didn't do so, for example, if we put the 3 checks into our bank statement in accordance with when we got the checks, and we just wrote them and put them into the bank statement. Say this 50,000 is comprised of 3 checks that we took to the bank and deposited at one time, and we put them into our system as 3 deposits that added up to 50,000, then it's going to be a little bit more difficult for us to check I'm going to have to find all the checks that add up to the deposit amount that I deposited into the bank. And that's the point of using that undeposited funds account, so that we can group everything in the same way that we deposit into the bank, and that makes this process a lot easier. Now, it shouldn't be too difficult if we only have a few deposits, but some companies have a lot of deposits and group a lot of information together to make those deposits, and the more efficient you can tie in the look of what the deposits will be in our system to what you will see on the bank statement, the easier the bank reconciliation process will be. Okay, so then we're going to say, okay, here's the 65. So we're going to go back over here. Here's the 65. And then we're going to say the other is the 168.28. 168.28. And so we found that one, and the 20,500. There's the 20,500, and we found that one. So we found all of the deposits on the bank statement on our books. We didn't find this deposit on our books on the bank statement. Now again, that could very well be because of timing difference. We went to the bank and deposited it at the end of the month, and it didn't clear possibly till next month. Now it should only take a day to like 3 days to clear. So we may be more concerned about this deposit than we would be if it were a check, which could take at least a week to a couple weeks to clear. And so we might want to go again to the bank at this point in time and go to our online account or check with the bank and say, hey, did this clear in February? If it did, that's okay. We don't check it off if it did. We just note that that's going to be the difference in our balance as of the end of January. Our bank balance is going to differ from the book balance. Our bank balance is correct because we did write this check in January, and so we're going to keep it in January. The bank just doesn't know we wrote the check in January. It doesn't clear their bank until February. So our bank is our records are correct. It's just a timing difference. So now we're off by that 95 because we haven't entered those other two. So here's what we're off by. If we go to here, we're off by these two. Now, if it's on the bank statement and not on our books, we're going to have to fix our books unless the bank is wrong, which is rarely the case. So we're going to go back over here and say, all right, let's go to our check register. Banking, use register. And we're going to enter I usually just enter them at the end of the month. So we're on January 01, 01, or 01, 31, 19. It's going to be, and it's not a check. So I usually write something like other. It's not a check. It's not a deposit. So I'm going to just say other. It's going to be from the bank. We could put the bank there. I'm going to leave it blank. And and then we're going to put the amount, which is going to be a withdrawal of $80. So we're going to have a withdrawal of 80. So we're going to put the 80 here. And again, we don't know the payee on this one. We took $80 out and did something with it. So we're assuming that if we took it out of the checking account, that we did something in the business account, that we did something business related. Now, if we didn't do something business related with it, we took it out for personal stuff, we should put it to draws. We should put it to draws and not affect the income statement, not affect net income. And that would be the proper thing to do. If we believe there is something business related we did, but we don't know what it is, then we might put it to something like miscellaneous expense. And I'm going to make up a new account, or make a new account, miscellaneous expense. So miscellaneous expense. So MISC dot expense. We'll keep it at that. And tab, it's going to say you haven't set that up yet. We're going to say yes, set it up. And then we will set up, it's an expense type account. That is correct. Miscellaneous, we're going to keep it there. Now note that just to be aware, the use of personal expenses on the business account is something you got to be really careful with, because it could have obviously pros and cons. It makes the business account look bad because it's going to create more expenses on the business account and make it look like our net income is lower than it otherwise would be. And therefore, if we wanted to impress people, such as when we want to get a loan or something and look good, then that would make it more difficult. On the other hand, when we do taxes, then if we have personal expenses on our income statement, those are deductions, makes us look worse. We're basically going to the IRS and saying we didn't make this much money. Look at our net income is low, and it really shouldn't be because we have expenses on there that are personal on the business side. So from an IRS standpoint, they're going to be skeptical of things that are expenses in something like a miscellaneous account because they want to make sure that it is a legitimate expense, because their suspicion is that the income is artificially low in order to avoid paying taxes. So there's a double-edged sword to misplacing expenses for personal and business. On the tax side, you want to be careful that you're reporting the correct taxes, and if you put expenses in there, you're going to report less taxes because your net income is going to be lower. On the just looking good and accurate record side, then putting personal expenses on your records will make you look worse. And if you ever want to get a loan or something like that, then you won't be looking as good as you really are from a business perspective if you have personal expenses on the business books. So we're going to say save and close here. And then again, you might want to put a memo, but we don't really know what to put right now because can't remember what it was. So we're going to say okay, and there's that one. So the other one's going to be for the $15 of business chart or bank fees. So we're going to have bank fees. So we're going to say again, I'm going to say other, and we could put the bank. I'm going to keep it blank again. We're going to 15. And we're going to, usually there's an account called bank service charges or something like this as a default within QuickBooks when QuickBooks set up the system. So most any type of industry that you set up, QuickBooks will give you a chart of account and usually add the bank service charge. Again, the bank service charge is pretty low a lot of times, so some people will just put it into miscellaneous as well, given the fact that it's only like $15 here. So others, like me, I like to break it out and know how much the bank is charging me. So I'll break that out even though it's usually relatively small compared to other expenses. And so we could put the memo here. It's kind of self-explanatory. So if there's any unusual bank charges, we might want to put it here and note why they charged us the money or something like that. So we'll say record. Once we do so, we can just go back to the bank reconciliation in our open windows, and we should just be able to find those two items. There's the 80, checking it off. There's the 15, checking it off. If we go back to our statement, now we found everything on the statement. So that's the goal. If we find everything on our statement and the beginning balance, the starting point is correct, we will then be in balance. Going back to the reconciliation, that is indicated here. Now, if this isn't in balance, even if it's only like a couple dollars, like if you're saying, well, this is only off by a penny or so, or even a couple dollars, or even if it's like a few pennies, then you can think, well, that's not a big deal. I can reconcile. What you can do is you can click here and QuickBooks will say, do you want me to force the reconciliation? And you're going to say, well, it's only off by a few dollars. It's only off like a $25 or even, whatever it's off by. And that's irrelevant to my numbers. So yeah, go ahead and reconcile it. You don't want to do that though, because really what happens here is even if this number is low, it's off by a small amount. What it means is we didn't exactly reconcile, and that means we don't know what that's included of. It could be included multiple things, meaning if you had a deposit that wasn't in place and you had a check, so it could be, we had this deposit that we didn't find and we had this check, and it's only off by 228 in that case. Well, that's pretty close for some businesses. 228 would be very small compared to the revenue, and you can check that off, but this could be a result of multiple things that are not included in the books. So unless you're pretty much right on, then the bank reconciliation is far less valuable if you force it to reconcile in some way, because that means that there could be a significant amount of multiple things that aren't there. It doesn't mean that there's just one thing that wasn't there for 228 in this case. It could be 15 things that weren't there that add up to a difference of 228. So unless we're pretty much exact, even down to basically the dollar or penny, then we should really go and make it exact. And it shouldn't be too hard to do, because even if we have a lot of transactions, all we have to do is find all of these transactions on the bank statement, reconciling from here to there. If there's something here that's not there, then we should fix it and just go fix it. So it should be pretty easy to do, even if you have a lot of transactions, to just tick and tie the thing out and get it to be exact. If it's not exact and you force it to work, then it takes away a lot from the double check, the internal control of what a bank reconciliation does. Okay, so we're going to go back over here, and then we can go ahead and reconcile this item. So this is just the worksheet. This isn't really a reconciliation. Once we reconcile, we will get the reconciliation. So we're going to reconcile this, and it'll give us ever have a call bank. So this is a pop-up to track our banking with QuickBooks. It's kind of an advertisement. So I'm going to say, okay, keep it there. And so now we can either do a summary, detailed, or both. I recommend either the detail or both. And so the default is both. We'll keep it on both. And the reason you don't want the summary, well, we'll look at the summary. So we'll say display, and here they are. So we're going to say this report displays current data. Okay. So here is our report, and this is going to be the summary report. We have the cleared transactions are going to be up top. Now this isn't really, this is going to be the beginning balance. These are the cleared transactions that we have here. So this part up top, I wouldn't really consider as part of the bank reconciliation. This is just kind of what happened. And this is on the bank statement. So this isn't giving us any detail in terms of reconciling the bank account to our books. It really starts here where we have the cleared balance, all the stuff that has cleared the bank statement, either in a prior time period, the beginning balance, or on the current bank statement. Here, that's what's cleared overall. So that amount is what is going to be on the bank statement. If we go over here, it's going to be our ending balance on the bank statement. So this is what's on the bank statement. That doesn't match what's on our books. So if we go back here again, it doesn't match what's on our books. And what's on our books, if we go to reports up top, if we go to company and financial, we're looking for the balance sheet. And as of 01/01/19, our books show 140,000. So the reconciled amount here is 109. We've got the 140 as of, sorry, this should be the end of the period, 01/31/19. It should be 94,341. So this is what's on our books as opposed to what's on the bank statement as of the end of the month, January 31st. Back to the reconciliations summary. So these are going to be the items that are actually the reconciliation. So these are the ones that are going to be 5 items that are not cleared, check items. 1 item that's a deposit that's not cleared. That gets us to our book balance, the 94,341. That's on our bank statement, on our balance sheet, 94,341. So if we go back to the summary and the open windows, so really this is the meat, this is the reconciliation from this number to this number. This stuff up here is just summarizing basically what's on the bank statement. This stuff down here is what's happening after, like in February or after the point of January, which is not really necessary for our bank reconciliation as of the end of January 31st. Now, this doesn't give you, however, what those 5 items are or what that 1 deposit is. And therefore, I would highly suggest to print out the detailed report because that's what you really want, or what are those items. So I'm going to go ahead and export this and then print it. So we're going to export to a worksheet. We're going to say an existing, actually I'm going to say a new workbook and export. Here we are. We're going to go to the View tab up top. I'm going to unsplit the panes. We're going to go to January Bank Rec. I double clicked on that and put that there. I'm going to go ahead and save this. Go into File, Save As, Browse. I'm going to go to the desktop and Get Great Guitars, Reports. This is going to be section 9, so I'm right clicking, New Folder, section 9. And then I'm going to put this in there as a section 9 report. Section 9 reports. And save that. And I'll say yes there. And so that's going to be the first item. I'll close this back out. And then I'm going to close this. and then we're going to go to the reconciliation detail. Now this can look messy because it's got all this detail in it, all the actual checks, but this is what you really want. And just note again, when you look at this, this top part isn't really the bank reconciliation. That's not what we really want. We can say, yeah, that's the beginning balance. That's all the stuff that cleared the bank statement, which means it's matching pretty much what we have on the bank statement. That's not new news. That's nothing new, really. So we're going to go down here. What is new is we got the 109,415. That's our beginning point, which we're trying to reconcile to the bank balance as of the end of the month here, as of January 31st. And that includes these 5 items to the ending balance here. So the register balance 94,341 go into the balance sheet in the open windows. That's the 94,341. Back to the reconciliation. So again, it looks like they give you just way too much information that you need for a reconciliation. All you really need is this number, these items, and this number. These items, by them giving us exactly what those items are, this check, this check, this check, this check, and this deposit have not cleared and should clear in the following month, that's what really gives us the assurity that everything else is correct, because we know exactly what the difference is and therefore we have reconciled. Again, if we're concerned with these items, then we have them and we can go to the bank statement. And note, when you're auditing this or assuring this, if you're reviewing this, you want to know exactly, you don't want to just see 5 items. You want to see what they are, because if someone was going to put something in there just to reconcile, then it would be included as one of the 5 items that are reconciling, and it wouldn't be a legitimate item. So we want to make sure that all these 5 items are legitimate and they look good here. If we want more assurance, of course, we can call the bank and see if those are the items that are, if they're legitimate, if they cleared the bank in the next month. And then again, this stuff down here just means that's what happened since the bank reconciliation date. It doesn't really have anything to do with what we're doing as of the bank reconciliation date. So I'm going to go ahead and export this again. We're going to go to Excel. We're going to create a new worksheet. We're going to put that to the existing workbook and browse. It's going to the desktop reports. I'm going to put it into section 9 and double click the section 9 reports. Then export. So here we have it. So I'm going to go ahead and go to the view tab. We're going to unsplit the panes. I'm going to pull this to the right. I'm going to grab this and pull it to the right. And then I'm going to double click on it and say this is going to be the January detail bank rec, or something like that. And again, note that it's not all on one page, so we can clean this up. We can see that if I go to the second view, page layout. And so then I'm going to go back over here. And so these lines aren't on the same page. We can try to go to the page layout, and we can go to orientation and landscape. Could help. So that pretty much does it. And if you wanted to go through here and just clean this up to give it to somebody else, you could probably go through and just delete, if I really want to know what the bank reconciliation is and not confuse someone, I'm going to hold down Control, left click, and drag this over to create a copy of it. So here's the copy of it. Really, you could say, hey, I'm going to delete, I'm just going to put my cursor on this too, go down and delete all this. And that'll give us the 109,415, the amount that's on the bank statement, and then the ending balance, the register balance, the 94,341 is what we need there. All this, just gonna do the same thing, delete, and then this is really what we want. That 94, that is what is on our balance. If we go back here to the balance sheet, 94,341. That's what we have there. So this is really the meat of the detail that we want, and this is the detail that we want to see. So you could, print this out, another use of Excel, print this out, clean it up, take what you really want from it, and you can even clean it up further than this, put it on one column and get rid of some of these other columns that you don't really need. So that's one of the benefits you could have from this information here. Also note that if you do print it as a PDF or other format, it will have the header on it, and you can print both of these formats in one PDF file by using the print feature, print as a PDF, like a QPDF printer. For more accounting information and accounting courses, visit our website at accountinginstruction.info.